Alrighty, traders, go. Welcome to the AAA session today. If Chris, if you can go ahead and do me a favor, I think we got a new link for the session, the broadcast today. Tyler, if you can go ahead and also share the new link to everyone in the chat, so we can go ahead and get everyone in this video, in this live session. There was a little bit of a technical issue. We had to create a new link. Check it out. Go ahead and make sure that we share out the new link for everyone there. Hey traders, welcome. We've got a lot to discuss today regarding what's happening in the market. We had a couple of things happening last week. We had jobs, obviously. That was a big number that came out last week on Thursday, just before the long weekend for the 4th of July. We're going to go ahead and talk about what's happening this week and also what to look out for, because we do have a rate decision coming out this week. The Aussies are expecting to keep the rates unchanged on Tuesday morning, early Tuesday morning. Keep the rates unchanged at 0.25%. We'll check out and see how the markets react regarding that. Now, it's only me and Chris today. We don't have Tyson in the session today, but we're going to go ahead and get started this afternoon and take a look and see what's going on with the marketplace. So without further ado, let's go ahead and introduce my guest. Chris, good day. How are you doing, buddy?
I'm doing well, Gary. Thanks a lot. Happy to see you, and nice to be here today on Monday to kick things off.
Yes, it is. Yes, it is. And we do see that we're getting a couple of new students coming into the room right there. So did you share the link with the other people?
I did, yeah. I've got it to the Flex Room, to the Equalizer, some classes, so we should have about 1,000 people seeing it right now.
Good. Excellent. Fantastic. Great stuff. So let's go ahead and get started because obviously there's a lot of discussion as to what's going on right now. We did have the jobs come out yesterday. We had U.S. Jobs come out. Those jobs reported on Thursday last week. In fact, I'm going to go ahead and pull up the numbers right here so we can go ahead and reflect what the numbers were. And let's just talk around the numbers last week. So here's the details from last week. And we can see that the average earnings was, that's obviously going to be a concern. Jobs are being created, that's fine. But what's happening right there is the jobs that are being created and the hiring of those positions aren't the positions that are qualified in. So which means that people are overqualified for the positions that they're taking on. We did see an unemployment rate. The unemployment rate that also ticked lower to 11.1%, which is also inevitable based on the fact that we did have higher numbers coming out in March, April, May that was due to the COVID-19 effect, right? So that was the details there. Any details that you want to go ahead and share on the numbers? Not a great report, but it is showing that it is starting to tick up a little bit.
Yeah, so I mean, it's really since the middle of March, even into April's job numbers, we've kind of said with a grain of salt, like the data isn't really going to be the driving factor. Like there's trends in non-farm payroll, there's trends in employment factors across the globe, but we're seeing numbers that are so skewed one way or the other. Whether we saw -6 million, -7 million to now, creating 3 million last month and 4.8 million this month. It's like you have to remember that there were 25 to 30 million unemployment claims and filed for the last 3 months. So this is where jobs are coming back into, the reopening of the economy.
Yes.
I don't see this as like we just created 4.8 million jobs out of nowhere. It's like a lot of these are service industry jobs. Like you said, I mean, average earnings are down. So, if people are just taking work, and, I have a phrase that's like any job, better job, and then a career. So any job, it's like if people are willing to say, look, I need to go back to work, I need to do something. It may be a transition in career, but it's like you're going back to work, people are going back to work, that's fine. So the trend in this is important to watch for the next couple of months, I think. But we're not anywhere near, coronavirus being over and done with. I read a lot of articles this week and just kind of get a sense on where, big macro pictures are, where the analysts are looking at forecasting. And I think it boils down to this. All right. We clearly have a willing central bank that's going to sustain some type of safety net and pacify the market's concern. So I think right now there is such a reluctance for the market to drop that I would suspect that any, let's say we have a 5% dip. If we have a 5 to 7% dip in the stock market, maybe even 10% dip, I think there's, again, going to be another bottom. Just like we saw last year. If you looked at from August of last year to the end of the year, we had like 3 to 5% dips, 3 to 5% dips, 3 to 5% dips. Every time those dipped,
Yes.
the markets rallied. And I think that we're going to push like that. until we get into the election. And then, of course, the big breakout or the big collapse might be pending the November election. So I don't think the Fed is going to let the market blame it for a decline. I don't think the Fed
Sure.
is willing to let, coronavirus, is out there and cases are screaming in the U.S., but the markets are looking past that. The markets are looking past, Q2 earnings being awful and looking through the uncertainty of Q3. So there's just so much help right now to prop up the stock markets that there is risk appetite and there
Sure.
is a need for money to go somewhere. So I know that's a long-winded answer, but job report wise, I don't really trust the numbers. I think what we have to do is follow price. And if price is not showing risk off, then it is clearly risk on. It may not be high volatility, but it's risk on trading right now.
Right. Now, if you go ahead and take a look, we had the jobs coming out last week, but this week we have also a rate decision coming out for the Aussies. It is the cash rate for the Aussies coming out. Of course, the statement is, I think, the big kicker right there. I think we're going to get more action out of the statement than we are going to get in the rate decision. The rate decision, I believe, no changes to that. That's what the forecast is, and I don't believe that they're going to do anything regarding the rate decision. But of course, what is in the statement and how they're going to move forward is important, and how the investors read through that is going to be dependent on how the market reacts accordingly. I don't know about you, Chris. I know we've spoken about Tyson. He's been looking at some Aussie cross. In fact, Aussie US dollar was one of the pairs that he's been focusing in on. And I've been focusing on a lot. In fact, I did one of my sessions this morning in the trading room. And in the trading room, we spoke about Aussie crosses, and I'm holding probably 7 currency pairs. No, actually, sorry, my bad. 5 currency pairs. 5 currency pairs against with Aussie with the Aussie cross in those bunch of pairs. Now the deal is this: each and every one of those 5 currency pairs that I'm focused on that has the Aussie in has got one signal, and that signal is that we're looking for a bearish sell-off on Aussie itself. So a sell-off on Aussie, does that mean that the rate decision today could be that key factor? And I'm going to go into some charts just to go ahead and show you exactly what I'm looking at. In fact, let's do it right now. I'm going to pull up the Aussie. Let's go to Aussie. Start off with the Aussie. Well, let's go pound Aussie right here. Let's just do pound Aussie. And I'm going to pull up the daily right here. And if I look at the pound Aussie, I said to traders that even though we have pound Aussie trading slightly below this trend line, I still don't see this as a convincing break. And therefore, I'm looking for price to start working its way back up. See a correction move in the pound Aussie right here. I'm definitely looking for a correction move in those. Whether it comes back inside this channel and trades back up to resistance, correction is due on the pound Aussie. So again, Aussie weakness, pound strength. See a pound rally, pound Aussie rally right here. Go to Aussie JPY. Let's take a look at this. Aussie JPY. We've had, and I spoke about this as well. And you give me your input on this as well. But I'm seeing here that I've got, and this is what's exciting about this particular setup right here. I'm looking at this and I'm seeing that we do have a wave 1, 2, a 3, and a 4 wave right here, and price is trying to work its way up to the 5th wave. Now, it's still in wave 4, and wave 4 is seen as a range-bound trading pair, or sorry, range-bound trading condition. And so if we are going to stay inside this range, then what we may end up doing is just see the market pop a little bit above. So if the market pops a little bit above the previous high, and we have this divergence in play right here with the momentum moving down, price moving slightly up, then we could be seeing a sell-off on Aussie JPY as well. Now that comes to the question that you had, and that is risk on, risk off, right? If we're going to start seeing some risk on, risk off currencies like the JPY starting to strengthen, then this could mean a sell-off in the stock market.
True. And, and look at the levels that would come back to, Gary. I mean, we're in a perfect time right now to expect to see highs and lows form or ranges form. And so after that brief sell-off like 4 weeks ago, if that Aussie yen trickles up towards a high around 76.50, I'd love to see a double top or an equal high or a slightly higher high that fails. And you like that disagreement, that divergence. And, and this is now, 3-4 weeks we've talked about technically looking for setups on Aussie weakness. Look, there are times like this where we have a setup, we had the technicals, and look, we might not be perfect on the timing of this, but we're probably spot on with the direction. It's just a matter of when the level is good enough for the big movers to actually take it where, we're expecting it to go. So, Aussie
Sure.
yen hitting that high, Aussie Swiss hitting that high, Aussie dollar hitting that high, pound Aussie retesting the lows, Euro Aussie retesting the lows. The entire basket looks fantastic. So, I'm looking for either divergent highs, divergent lows. I'm looking for overbought, oversold conditions. I'm looking for range highs, range lows. And over the next 3 weeks, as we get through the rest of the month of July, I mean, I wouldn't expect there to be just continuation and just crazy trends. It's like, if it's going to go higher, it's barely going to go higher.
Sure.
So I'm not, and it, like, for me, it's like, I'm not going to chase it. I'd rather let it go a little bit higher and start looking at confirmation to then sell it, because I think that's the bigger move that's coming. So that's my plan. Like, I saw somebody ask earlier, could we look at the pound Aussie? I mean, pound Aussie was going to be my currency pair that I brought to today's session, because technically, not only do we have great levels, you have your channel that you just showed the traders. I have a bar count actually that I'm really interested in with my Right Trader Max system. So we have an overstretched, I mean, some bar counts that I don't really see happen very often on a 4-hour chart. And I think probability-wise, we have a nice, strong move to the upside, even if it's for, let's say, 300 to 400 pips. I mean, if that's this week's direction or next week's direction, that's 300 to 400 pips that I'm certainly going to go after and capture.
Right. Absolutely, absolutely. And if you look at, I popped open you mentioned the Aussie US dollar right here, and I can see that the Aussie US dollar is doing exactly the same sort of setup right here. We also have the market pushing up a little bit, but again, look at momentum. Momentum is still pushing down to the downside. And anytime I see this sort of action where price is moving up, but momentum stays here below the overbought condition, we may get a retest of the overbought condition, but overall we're going to see divergence taking place as soon as price takes out the high right here, which means sellers should start getting into the market and start looking to sell it back down to 66. And I know we spoke about this with Chris, sorry, with Tyson. Chris, we spoke about this with Tyson, and we spoke about that 66, 62 level, and we said that 73.52 could also be a level that price could go ahead and retest. Now, with those levels being a support and a resistance level, it depends on how the market moves based on the news. If the market does go to 66.60, let's call it, then we're expecting the fifth wave move towards 73.50. But if price moves towards 73.50, then we're looking for price to go ahead and complete its fifth wave, but then go ahead and take out wave 4, which is going to drop back down to 66.60 again. So those levels are definitely key levels we need to watch out for, because whether or not price breaks up or breaks down, those levels will come into play. It just means it just depends on which one comes first.
Yeah, I agree. So, like I said, we may not be perfect on the timing of this, but I have a couple of I'm not super exposed. I mean, so Gary, when you had mentioned your 5 currency pairs, those are all against the Aussie, right? You're looking for Aussie weakness on all of those?
Yes.
Okay, so
Yes.
my trades I am in, I have pound Aussie long right now, and I have Aussie CAD short. Those are the only 2 that I have that's Aussie exposure. Pound Aussie is nice and light. Couple of tester trades from last week. I've got another order down at 76. If it hits, we'll talk. I mean, we show the charts. We'll talk about that. But I'm expecting this to come back to 82.50 or 8300 in the next probably maybe this week with the Aussie rate decision, if there's a big move against it based on the statement, or next week. And, honestly, if it goes sideways for a couple hundred pips, guess what? This is the same thing that happened last year when the pounds and all the – look, think of the trends, right? Last year the trends were pound was extremely weak, extremely weak, extremely weak, to the point of it started to bottom out and transition, and then it went extremely strong. So the Aussie's been extremely strong, 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 strong. It's starting to top out or bottom out, and that transition will likely be the direction we've been talking about for the last 3 or 4 weeks. So
Yeah.
stay patient. Again, especially when all of us are seeing the same thing, when all of us are agreeing on the same thing, we tend to be pretty spot on with the direction. But the hard part that we're noticing, and Denise said it too, it's like the markets are testing these extremes more so than before. Like it seems like it's kind of a one-sided move. It's very unbalanced. And then if you give it enough time, the market does what we think it's going to do technically, which is finds a way to balance. So I think it's just a matter of time. But it's frustrating because now that markets have slowed down a little bit for July, lower volatility. But I still think like they're just great setups. I mean, the Aussie CAD's a great setup. The New Zealand CAD to me is a great setup. The pound Aussie is a great setup. I'm taking good setups, period, and I'll stick
Yep.
to that. So.
Yep. Now, what I want to do is we've got the 26th anniversary event taking place this week, and I know in the anniversary we got some breakout sessions. Both yourself, me, Tyson, and as well as the chief. We've got sessions that we're going to be talking about algorithms, short terms, with scalping strategies, as well as swing trading strategies, and everything that we're going to be discussing and talking about is going to help students be able to take advantage of these types of different conditions, market conditions that we're experiencing. We've had these stronger trends, we've had quieter trends, we've had more range-bound trading. These different types of conditions are actually coming in waves in different parts of the year, and it's important for us to be able to make sure that we understand exactly how to be able to approach the market based on the environment that we trade in. And so it's important to be able to understand those conditions so that we know exactly how to be able to approach it. You're going to be talking about some systems. I know that you got right traded max, one of the systems that you're going to be talking about, discussing some trading around it. I know pockets is also another thing that you're going to be talking about as well. So there's a lot of conversation around the conditions that we're currently in right now that students need to get into the 26th anniversary event if they're not in already.
Yeah, I just so over the weekend I was finishing up all of my my portions for this because I'm really excited about this week with having the time and having all of us together. It's like having Chief and having Tyson and you and me and all of us get to have the breakout sessions are something we've never done with the anniversary event. So to have each of us kind of focus on a different facet, it just shows, number one, that we all are well-rounded traders. I mean, your specialty, Gary, is not one thing. Like, you are very good at at a ton of different strategies. And so these breakout sessions for all of our days, Tuesday, Wednesday, Thursday, we all get to focus on something different. So day one, I think day one for me is scalping, and day one for you is swing trading, and then we kind of switch roles throughout the week. So you're getting a bit of like our best practices on all these different environments, which really think about what you're going to have to do for the next 6 months. We're not going to see current market conditions be the same 6 months from now. We're not going to see the same market conditions. I mean, it's just, this is what the market does. The market has these seasonal cycles where we have decisions, indecisions, ranges, low volatility, high volatility, and it's always keeping traders on their toes. It's always keeping traders a little bit in the discomfort or the uncomfortable zone, which I think is good. I'd rather be uncomfortable, ready for anything, than comfortable and then get caught off guard and not know what to do.
Right.
So these conditions are important that traders can adapt, and so that's what this anniversary event's all about, is showing you, like, look, this is when what I'd like to explain is this is when trading is super easy. And absolutely make as much money as you can and be as aggressive as you can when you see these type of environments that you're really good at trading. But if you're not so good at that, what else do we need to recognize? What other systems and strategies do we fall back on? So there's a lot of great information to take away from this week and joining us. And so, I mean, I'm hoping, I know we have a lot of traders registered for it. If anybody is interested, make sure that you reach out and get registered and slotted for the anniversary event. It starts tomorrow morning at 10 o'clock. So we'll be going strong all week from Tuesday to Thursday.
Well, Denise says they're very excited about the anniversary event. Actually, we are excessively excited about the anniversary event. Hey, listen, if you're not involved in the anniversary event, the 26th anniversary event here at Market Traders, make sure that you go ahead and contact your account rep, reach out to your account rep to get into the sessions, because it's going to be absolutely fantastic. It's definitely going to leave you with a lot of things to think about and to possibly make some changes to your trading. Chris, and I don't know why I'm going to keep calling you Tyson, but anyway,
Tyson.
Chris. I guess he's on my mind.
Just blend us together.
Just blend it together. Well, Chris, this is the thing. What is your focus this week? Knowing what you know already about the market, knowing that we've got the news coming out tomorrow with the rate decision for the Aussies, I don't see a lot more out this week. In fact, it's a very quiet week. We do have Canadian data coming out, jobs coming out for the Canadians on Friday. But that's about it. So we've got rate decision tomorrow morning, which is early tomorrow morning, and then we've got the Canadians job reports coming out on Friday. What is your game plan this week? And we definitely want to take a look at the U.S. oil and see how that's set up. We still haven't broken above that $42 a barrel level. I'm still thinking bearish down to $26 a barrel, right, on U.S. oil before we see a breakout towards $66 a barrel. But what is your game plan this week as to how you're going to go ahead and focus on this week's trading?
Yeah, so I'll talk about the game plan for this week, and I want to circle back to oil for a second as well. So
Yes.
game plan this week with Aussie news. I mean, kind of the big catalyst news wise this week would be Aussie rate statement, and then literally, if you look at the high impact only, you have Aussie news and you have CAD news. That's it. In between there, Thursday there is medium impact news. That is unemployment claims for the U.S., and on Friday you have medium impact for the U.S. That's producer price index. What I'm looking for between Aussie pairs and CAD pairs this week is I'll be looking for pockets. I'm looking for short-term stuff to trade. There was a pocket this morning set up on the dollar Swiss and the euro dollar. I just missed an entry this morning, Gary, on the dollar Swiss. I had a pending buy on my dollar Swiss. I'm looking at it right now. Man, it just missed me. I've got a pending buy at 9385, and if I zoom in, price today was probably right at 9385. Low was 9383.8. I literally missed filled there by maybe zero point 0.6 pips, like ridiculous. But nevertheless, I mean, I'm looking for short-term inefficiencies and looking for short-term pockets. News like this week, when it's a light calendar, we might have some of that news that creates these big disparities. So if I can find a pocket on Aussie CAD or Aussie New Zealand, I'm definitely going to look to trade it short-term. If we see something on CAD crosses, same thing. I want to circle back to oil, because one thing you might want to take a look at, Gary, or we can take a look at everyone in the session, is the dollar index. The dollar index, I'm curious where you see the levels going on dollar index, because I think right now, if the dollar index is, again, it's not aggressively trending, but it is looking to break slightly lower, and we probably are going to head back to those March lows. Now, if the dollar index heads lower, I do think that you're going to see a sustained level of commodity strength. Now, it may not be stronger oil, but I think oil is going to still stay in those high 30s. The one level, like you said, if it can't break above $40, if it can't break above $42, then oil is definitely looking for a range high. But I mean, it's kind of, I think, with as much as the commodity world is priced in U.S. dollars, if the dollar gets weaker, I mean, we might see gold levels sustained, silver levels sustained, copper, iron ore, and oil might all be like pretty sustained, where the dollar just gets a little bit softer with these commodity prices. So
Yeah.
that's dollar index, and I'm curious what you see there. Like if we came back down to test that low from looks like June, or test that low from March, I could see the dollar coming back into those areas before we have a bit more of a recovery rally on the dollar. But I think medium term to me, the dollar index looks pretty bearish to me.
Well, I've got the dollar chart open right here. So I've got dollar index open right here. I actually made an adjustment to my trend line. This is the daily time frame. And so I took the low over here. I connected it before on this low right there, back in December 2013. And I moved it up now to the 2018 or 2017 lows right here. And I'm getting the market testing. I actually adjusted. I didn't move the trend line down to the low here in March 2020, but I'm getting this level that's been tested a few times right here, 1, 2, and then 3. So it seems pretty valid right here. But although I've got a trend line, a small little channel going up right here, we have broken the channel. I'm still seeing this at a very key level of support right here, and anticipating price to go ahead and continue to work its way back up north. So I'm looking for dollar index to actually continue its rally, and as it continues its rally, then I'm going to go ahead and look to the risk-off currency pairs like JPY gaining strength, Swiss franc gaining strength. You spoke about the US Swiss that you were trading this morning, or trying to get into a trade on that. If you take a look over here, we are range bound on this. Now, both of these are safe havens, Swiss and US dollars. So if we do get a little bit of movement moving into risk on currencies, then risk off currencies, then we're going to see maybe it's a little bit of sideways action on this, rather than go ahead and move back up to the range. But this is range bound. I mean, the US dollar Swiss is range bound, and it's been range bound since 2014.
Yep. And
Look
those
at that.
levels, I mean, I have pending buys right there at 9,200, 9,250. I'm loving that. I'll buy it definitely off
Oh,
those
you buying
levels.
in on you buying on your US dollar Swiss?
Yeah. I'm
Oh
looking. So
yeah,
I mean,
absolutely.
if it comes down to those lows, I'm just a buyer and a holder. And
Oh yeah.
it's been range bounds. You said what year? I mean, it goes back to 2015, and then within 2016 to present, we have all those significant lows for the last 4 years that I think price will be great at.
Yeah, early 2015. So January 2015, when we had that flash crash, it's ever since then it's been just range bound. It hasn't broken out of the range. And look, the range is pretty big, so which I like. And I'm going to be talking about this, by the way, and I know you're going to be talking about range bound trading as well in the 26th anniversary event. But this is a 1200, 1300 pip range. Am I right here? Yeah, about a 1200. Hold on a second, I'm not seeing the numbers right. Yeah, about 1200, 1100, 1200 pip range that we're trading in, which is possible still to trade. And I know that this is something that I've always thrown out there and said, hey, if we are in range bound conditions like a 1200 pip range on a chart like the US dollar Swiss franc, is it still possible for us to trade that strategy? And the answer to that is yes, you can. Gear up, gear down. We'll talk about that in the 26th anniversary event. That is one thing I'm going to be talking about as well with regards to range bound conditions, how to be able to gear up, gear down, and use that as a trend-based strategy around consolidated conditions. If we go ahead and take a look at the dollar index, if we can see a rally in the dollar index right here, which is down here at the bottom. If you can see a rally in the dollar index, let's take a look at US oil. Maybe dollar CAD might be a good pair to go ahead and focusing on when this starts taking place. Let's go to US oil. And the US oil right here, once again, still hasn't broken above that $42. Now, I'm expecting price to be rejected of that. I'm not saying we're not going to break above that. I think in time, we're definitely going to break above $42 a barrel. But I think we're going to get a test, another retest of 26. Listen here. I could be wrong, right? I could be absolutely wrong. And what I'm saying right now is absolutely rubbish. But the thing is this. If we do not break above $42 a barrel, in fact, sitting around about $40 or just above $40, if it breaks back down south and it does come back down, I would definitely be thinking strong rally in Canadian crosses once we get to $26 a barrel. $26 a barrel would mean that price is going to go back up to 66. And if it gets down there, I'm definitely going to be a buyer. Right now, I'm probably about 80 or 70% a seller on US oil, which means I'm expecting weakness out of Canadians. I guess the jobs coming out on Friday may even support what we're seeing right here. I don't know what the forecast is. I'm going to go ahead and pull up the forecast. Forecast is
half a million,
expecting increase.
Yep.
Yeah, look at the even unemployment rate. Unemployment rate, they're expecting that to also tick down to 12.5%. So this is actually going to be showing good numbers. Does it come out as expected? Are the numbers going to be worse than expected? And if it is, then could that be the ticker that we need in order to drive price down on the Canadian crosses? Now, that may not push oil back down south, but if oil does start sinking, then we may get this as like a double whammy, creating a weak Canadian dollar, pushing price back down again. So if I go to the, I'm going to go to dollar index, sorry, not dollar index, US CAD right here. Man, I sound like Joe Biden a couple of times there. All right, here we go. We're going to go ahead and take a look at the US CAD right here. US CAD, we have price. This is actually, we have almost like a double top forming right here at the top. We've got a confirmation point right here. This is what I marked off as confirmation. So double tops right here at the top. 2016 highs created a double top. We've got price coming back down here. Let's see here. We have it testing the backside of the trend line right here. I can see why traders would want to be on the sideline on this one right here because it's, let's see here. Okay, so we haven't broken above this channel line yet. And while it's below, traders are a little bit skeptical whether or not we're going to get a rally in dollar CAD. Once we break above this downward channel and we're on the right side of the channel, then we'll be looking for a possible upside move on US oil. So we're not seeing it yet. And it's because we're getting very little action out of the dollar index right now, but more or less action out of US oil right now. I think it's going to be, it's all going to come down to the numbers on Friday for that particular pair right here. And then maybe next week's going to be a good US dollar CAD rally for us.
Yeah, I mean, I think that if I looked at the calendar, we take a look at the calendar this week. There doesn't seem to be a lot of movement just coming out of the news this week. It seems like the path that the currency pairs are already on, that trajectory, that path is already kind of predetermined for more drifting. So I think if we have some of those highs and lows recently over the last couple of weeks, and it's going back towards them, like the Aussie pairs, for example, look to have it retest some of those highs and lows once again.
Yeah.
Pairs like euro dollar. I mean, I think euro dollar can be very firm resistance around 14.50. Swiss yen has some decent resistance around 114.50. So there's just a lot of currency pairs. Like, look left in the chart, go to the daily and weekly chart, see where those intermediate structures are, and
Yeah.
look. I mean, you can sell high, you can buy low. If it doesn't work, then follow the breakout. But I don't think right now is breakout conditions, right? I think like right now is drift conditions, low volatility. So I'm not chasing trends. So I mean,
Yeah.
honestly, and this has been a key for me for just like making some pips over the last several weeks, is I've been really passive on the manual trading side of things. And I've been letting my automated systems that trade range conditions and trade tight range conditions like this, they've been doing really well. My equalizer, my
Yeah.
perfect storm strategies, I mean, like last week, I think they were up over 1,000 pips. Week before that, like 700 or 800 pips. So those do amazing things when I know those are conditions I'm not going to trade myself. So, but of course, I mean, as things change, then I'm looking to get more involved with Momentum Breakout Max and Right Trader Max and all these, these great breakouts and trend
Yeah.
systems that will do much, much better. And so, I'll have to, and again, we'll talk about all this stuff with changing conditions, the different strategies, and when to automate, when not to. But look, like I said, if you're comfortable as a trader, then something's going to throw you off. Like something's going to make you uncomfortable at some point. So there is a time like this where we are planning for the best, preparing for the worst, and we have our charts analyzed and detailed, and we know what levels we're looking for. And so, I
Yeah.
mean, at the end of the day, we're looking to sell high, we're looking to buy low, we're looking to use good equity management and keep it really simple and straightforward so we can keep
Yeah.
doing the same thing that price keeps doing.
Yep. Chris, on your point with regards to consolidated strategies and trading strategies, if you take a look over here, Right Trader Max, we did in the trading room 27% return in the Right Trader Max with the Right Trader Max EA, which is a trend based strategy, right? And we made just I think it was just over or just under 5,000 pips for the month. But check this out. In the consolidated strategy that I use, which is target trading, look how slow it's been over the last couple of. I mean, last week we picked up 96 pips. The week before that we did nothing. But check out the 15th of June, we closed out 3,200 pips just in 1 week, and that was on previous trades that we held in positions that paid out in the middle of the month in June. So and that's what it is. If you get to these range bound conditions, just like you said, using these range bound trading strategies in this time is great. But I think the key here is, and we've seen it year after year after year during the summer trading, right? Summer trading is thin, and what happens is any sort of news that really gets out of the normal, any news out of the normal starts breaking out strong trends and continues to run for a long period of time. And if you can get yourself stuck into these range-bound trading strategies, it might put you into a position where you have to hold onto those positions for a few months before it actually comes back again. And so my concern right here is, Chris, and maybe you can share some of your thoughts on this as well, is that if you look at next week's trading, right? If I look at next week trading, this week's we've looked at the fundamentals. It's not a bunch of fundamentals coming out this week. We've got two. We've got the rate decision tomorrow, and then we've got the Canadian data coming out on Friday. But if you go ahead and take a look at the following week, it is crazy in the middle of July. We've got Bank of Japan.
Wow.
The outlook comes out, the statement comes out. We've got overnight rates yet in Canada, which is also going to be another added value to the actual news that comes out on Friday. We've got the employment change coming out for the Aussies. Then we've got the ECB press conference and their rate decision. So we've got a bunch of news and rate decisions coming out the following week, which is the mid part of July. Could this start spiraling things up? And if the news is going to be worse than what is expected, and the statements come out with very high concern about COVID-19, could this actually start developing into the strong trends that we've seen over the years, with regards to the trends?
Yeah, and I mean, you talk about, I like to say that the news gives the market an excuse to move. So you look at what's
Yeah.
aligned for next week. I mean, we have literally 2 high impact events this week, and we have like 20 next week. So the
Yeah.
difference of giving the market something to move on, that is a ton of news, and it's not just one currency. I mean, we're talking about Bank of Japan outlook report, policy statement, the pound, the Aussie, the CAD, the New Zealand, the euro. You've got every basket is going to have some influence on what happens movement wise. So that's great. In fact, that gets me actually a lot more excited for, look, a week like this, Gary, and everyone that's watching, a week like this, I let the market come to me. Like my expectations for this week are just let it happen. If it comes to you and you get filled, I mean, some of the trades we've been putting in for my trading room, selling high and buying low and pending orders, if they get filled, awesome. Then we'll deal with it. If they don't get filled, then we'll wait. But I mean, trades like next week, I mean, that could be enough movement and opportunity where there could be some good scalping. In and around the news, we could have some of the technicals we've been waiting for finally fulfilled because the market has a reason to do something. So I mean, the last couple of years especially, it just seems like you can't have one without the other, right? Without a ton of news and a big calendar, the market just doesn't like to move. So yeah, I mean, it was amazing how quickly like coronavirus got everybody all excited and all this crazy stuff happened in March. And then it's like the Fed and all the central banks and all the reactive measures. And it's just like back to squeezing out the life of the market, suppressing volatility. But again, it's not over. So don't think for a second that right now what you're seeing, I mean, and I know we have traders that come to market traders all the time that are brand new. If this is what you're learning to trade is this environment, get ready to buckle up in August, and with an election year ahead, it's like there's going to be so much to take away from this. The one thing that I know you and I would stress, Gary, would be equity management, trade size. I mean, especially if you're still learning. I mean, anybody that's been in these markets long enough realizes that if you are on the wrong side of a big move, and we never exactly know when it's going to stop moving, especially when it gets irrational, but right now, it's like I think we have a good window. We have about a 3-week window, in my opinion, of really tight, pretty boring conditions. Now, I want to take advantage of those with some really good, tight, low volatility, range-bound trading systems. But once we get into the first or second week of August and things start to look like they're breaking out, I'm going to start shelving those range robots and scaling them down or turning them off. And I'm looking for the bigger moves. I'm looking to follow along. And honestly, from August to the end of the year, I'm going to be a willing participant to wherever the markets go. I want to be willing to say, you know what, I'm wrong in that direction. Let me follow the other direction. I will be flipping, but I will be using good equity management to make sure that I'm getting, the right trade sizes, following the bigger trends, and let my winners outweigh my losers. So anyway, stuff like that we'll talk about in these sessions. We're certainly talking a lot about it this week, but good point on next week. I didn't even look at the calendar, but that's awesome. That's a ton of stuff next week. So that should definitely get the markets moving to get us in, at least have some excitement for July.
Right, absolutely. Well, thank you, Chris. Thank you. Appreciate it, man. And listen, hopefully everyone had a great weekend because it looks like we're going to get stuck and busy this week with trading opportunities. Next week is going to be the same thing. A lot of data coming out next week. So it's going to be an active week for us for next week. And I'm still looking at, of course, Chris, with the unrest here in the U.S., that is my sort of like hidden news that could come out at any time. If things really start escalating, this could really start affecting the markets drastically. And of course, like you said, on your point with regards to the elections, there is absolutely also another thing that could turn the markets very quickly if things go in a different direction. So we've got to keep an eye on the news, make sure that we keep an eye on the news, but also at the same time, don't forget equity management is rule number 1, and rule number 2, don't forget about rule number 1. So make sure that you keep that as your number 1 priority, equity management through these type of market conditions, these type of trading conditions. That needs to be your number 1 goal, to preserve capital. So with that being said, Chris, you want to go ahead and do your final thoughts?
Yeah, I was just going to say on the subject of news, I mean, look, there's going to be no shortage of headlines and news, and the 2 big overhanging things that the markets are going to digest and everyone's worried about, you've got coronavirus, you have U.S. election. Don't let that be a political reason or a news reason or opinion reason for you to deviate from what you see on the charts. Yeah. These markets are technically driven. And what happens is the markets use the news as an excuse. The markets use the news to, wait until the very last minute when no traders are in, and then these big moves happen and you're either with them or against them. So at the end of the day, follow the technicals and you'll be surprised how accurate you can be. Which means be aware of the news, but don't try to think that's how you're going to formulate all your opinions. I know that right now I'm taking every employment news event and even the data that's coming in, next week, I'm taking it with a grain of salt. Follow price, This next week, Gary, I'm looking for inefficiencies and pockets. This week, I look for it as well. We'll talk about in the anniversary event this week. But anyway, there's just a lot of good stuff. And I know you mentioned this, and I didn't hear you make the plug for it this week. But trading rooms, I mean, it's the best value we have at Market Traders. If you want to get in and follow somebody like Gary, like Tyson, like me, like Chief, look, I mean, it came up today. I mean, Chief is bullish on the U.S. dollar. Okay, cool. If you like Chief's outlook and he can make a convincing argument to you, then follow Chief. You're not going to hurt my feelings. But it's like we have our style and our way of trading, and Chief might be talking for the entire week, and it's because of his indicators, it's because of his outlook. Well, I mean,
Yeah.
Gary and I have it looking slightly different, or maybe I'm not as near term, maybe I'm more medium term on the dollar. But again, what we do find is we find a ton of great trades. We all produce consistent results, and there are a lot of ways to do it. But at the end of the day, as long as we are allowing our winners to run, or having bigger wins and losses, or more frequent wins and losses, we're all profitable, which is why we're here. So,
Yep.
And I know that's why you're here too, traders.
Absolutely. Trading rooms are definitely a way to get in and plug in with any of the mentors or instructors that you guys love to follow, love to listen to. Definitely get plugged in. You can get access to all three of the trading rooms, Chief, myself, Tyson's, by simply going ahead and registering for the Pro 360. So you want to definitely do that. But there's a question that came up here from one of the students. Abraham said here he's selling the Aussie US dollar, and he's selling towards a level of, I think it was 69 or so, 6,900. And he wants to know whether he should get out of his positions if the news turns around and heads in the opposite direction. Firstly, number one, we cannot tell you what to do, but we can tell you things that we would probably be doing. Firstly, I said in the beginning, I'm looking for Aussie weakness. So I'm going to continue to look for Aussie weakness, look for dollar strength. So Aussie US dollar is definitely a key player for me to look for Aussie weakness, dollar strength, and then continue to look for that sell-off on the Aussie US dollar. So I would be looking to sell on Aussie US dollar. How you manage your positions is up to you. If you want more details about Chris, how Tyson, how myself, how we manage our positions, and whether we cut our positions short or let them run, you may want to get into the trading rooms. I know, Abraham, you are in my trading room, but you want to get into the trading rooms to get more information about the details of that, because we can tell you how we trading. We can't tell you how you should be trading. So with that being said, guys, have a fantastic week. And for those that are in the 26th anniversary event, we look forward to seeing you there, and it's going to be an absolute blast. We're going to have some fun, but at the same time, you're going to learn a lot of new stuff. So with that being said, from Chris and myself, you have an absolute awesome week. This is Epic Big Dog and the team saying cheerio.